Delighted today to welcome Mark Haron, who's the Executive Director of Connective, who are the largest aggregator group in Australia. And of course, as a good broker, I am with the largest group. So, Mark, I'm delighted to have you here, and I really appreciate you giving up the time to talk to me for my clients because, well, maybe first up, you could explain, what does an aggregator do?
Okay, so an aggregator is a business-to-business service. So we provide mortgage brokers with services. And one of those key services is we hold the agreements with the lenders that enable the brokers to get accredited with those lenders and those banks so that they can submit their loan applications to the lenders. So that's a core functionality. We collect and distribute the commissions from that. And we also, in our case, we provide market-leading software platforms and systems that wonderful mortgage brokers like Louise get to use. A lot of education and training. And finally, a lot of consultation with government and regulators as well to help the industry evolve and become more professional and look after customers better.
That's awesome. And it's true. And also compliance. I get a lot of that. Yeah. They're a big help, actually. They really are. But anyway. Yeah. So in your role as Executive Director, I know you liaise with governments, state and federal, and banks, small and large, and you were part of the body recently that was responsible to implement the recommendations from the Royal Commission, correct? And how did that pay out? What did you see was the biggest change resulting from that consultation with everyone?
Yeah, well, it's ongoing because there's a lot of implementation of Royal Commission recommendations that are coming. Okay. One of the major ones that affects consumers from a broker perspective is the best interest duty. That has been delayed from a 1 July implementation to 1 January. And that was something we sort of consulted on a bit because given the COVID-19 situation, it didn't allow for us to do a lot of training, that compliance training in a time frame to get there. And plus we were waiting for ASIC to release their final regulatory guidance on it, which is basically they give us the information by which we know how to meet that legal obligation of acting in a customer's best interests. So there's some of that information coming into play and some of those things. So there's a lot that we have been working on. There's still a lot more things coming through in terms of that. There's things that will be implemented in October next year and then into 2021 as well. And so, yeah, the consultation goes on. We have I think the group you're referring to is the Combined Industry Forum, of which I was Deputy Chair. And of course we have industry associations like the Mortgage and Finance Association and the Finance Brokers Association that operate to assist with that as well. But a lot of these things we'd actually got together a couple of years ago and started working on the implementation and made the changes already from a self-regulatory perspective. So, for example, brokers don't get campaign or volume-based commissions anymore. They were removed from industry. So no special incentive to a broker just to write that particular bank's product because the broker gets some extra commission for a month or 2 months or if they hit a certain target. They've been removed to make sure that it's a lot fairer and that brokers are operating in the customer's interests and putting their customer's interest ahead of their own.
Well, you'd hope so anyway. Most of us, you wouldn't be in the game any length of time if you weren't looking after your best interests of your customers. So it sort of feels like, backhanded really. But
no, you're already doing it. It's just we're going to document it a bit better so that we can prove it to the regulators.
Yeah, good to hear. No problem. We're all there. And what do you see in your consultation with these industry leaders and governments and bodies? What do you see the after effects of COVID? Are they giving you some indication of what they see how it's all going to play out?
Well, it has really created a lot of uncertainty, and I think just listening to Josh Frydenberg this morning with his announcement around where things are going from a budgetary perspective, even the numbers that Treasury are predicting in terms of their forecasting, it is very hard to sort of forecast where things are going. Our biggest concern, I think, as an industry, as mortgage brokers, is how can we continue to help customers who have lost income, who have lost jobs, have lost businesses through the COVID-19 pandemic. There's some assistance being provided through banks and through the government. I guess the key thing that we're trying to work on is making sure that we as mortgage brokers continue to support and work on that. I know, as an example, when the first round of home loan repayment pause options became available by the banks were inundated with inquiries from customers and they couldn't handle it. So most of those customers, and what was great, a lot of mortgage brokers like this, and customers turned to their mortgage brokers then for advice. And what most people found is it's not a holiday, a repayment holiday. It's actually going to make you end up with more debt potentially if you don't manage it properly. If you can still afford to make payments, even if it's not the whole payment, just any payments, make the payments. But there's all lots of little nuances. And as we move through the next phase, which is that extension of those repayment clauses, those that need it, we say, please reach out to Louise, and the brokers to make sure they understand what each bank's requirements are, because they can all vary.
Yes, that's so true. We had a lot of conversations around that for sure. And a lot of people didn't. Some needed to pause for sure, but a lot of people didn't. They actually managed quite well. And they just didn't, they were just scared and they didn't know how to manage it. So yeah, it's really good to ring us up and have that chat so it can take a lot of that fear away. So that's really important. Yeah, we love being able to offer that help to people. That's what we do. Now, I particularly wanted to get you here today to talk about the open banking system, which has started in Australia on July 1st. And I want to see, well, what is open banking? I gather it started in Europe way back and like 2014 in the Asia region. Singapore was into it. India did it by 2017 and had developed a digital cashless system in India, and New Zealand in 2018. And here we are in 2020 and we're only just beginning. So how has this all come about and what is it to us?
Well, we are only just beginning, and it will be a very slow burn in terms of the adoption of this open banking program. Open banking is really designed to make banking more competitive and enable people to manage and control their data and enable them to switch products or switch banks more easily and more effectively. So it's a way of trying to get the banks to be more competitive, but it's enabling fintechs and other smaller banks potentially down the track to be able to more efficiently get customer data and information so that they can look after those customers quicker. Of course, from a broker perspective, that'll enable brokers to participate in that process and help customers go down that path and navigate that way. Now, one of the great things that a lot of mortgage brokers, and particularly really good mortgage brokers like yourself, Louise, have already been doing, we've been already using technology that does things like, we call it scraping or data scraping, things like bankstatements.com, which, and in this case, when a bank is looking at a new home loan customer, they want to know everything about you. They want to know not just where you live, but where you've lived for years, jobs in the past, but now they want to know all about your income, but now they want to know about all your expenses. They want to categorise those expenses, and that's how they're determining whether or not you can afford a loan going forward. They used to use basic debt service ratio numbers, but now they have a very convoluted process. And to facilitate that, Louise can get all that information straight from the bank statements without you having to fill out forms and try and determine, well, how much do we spend on this month and that month and this quarter. There's technology that brokers are certainly using to do that, but there's similar technology now that the fintechs are adopting and other banks will start to adopt as well.
Absolutely. Bank statements has been a life changer. It's fantastic and it's so much easier getting statements from people, and we're hoping in time that they won't even need to ask us for statements because they'll already see it. But it appears, even though they can see it at the moment, and I know a lot of them, they can see each other's banking, each other banks I'm talking about, they don't, they're still asking us for all statements to be provided. I've got clients up until the last minute before a loan's approved, or even after, but prior to settlement, loan's approved, then comes settlement, they still have to provide in between extra proof that they're still employed. So it's really tricky at the moment, even though I suspect they've actually got access to this data. And clients offer to give me their login and password to see their accounts. And I go, no, please don't give me that, because
it's a safer way of doing it.
Yeah. But now it would be great if we had access to see without having to, as long as they're your clients and they'd given you approval, you wouldn't have to keep harassing them to log in and even give you your statements. Is that a possibility?
But look, that's an important part of this whole open banking thing, and don't be scared that someone's going to be able to look at your data. first of all, as a consumer, so there's the consumer data rights is really where open banking started.
Yes.
And it's about giving consumers control over their data and who gets to see it. Now, at the moment, only the 4 major banks have been enabled to be able to share the data. That will grow as more banks will enter in that. But more importantly, the ACCC has to approve the third-party entities or any vendor who is going to receive that data. And then in the process of that data transfer, it's you, the consumer, that authorises it. And you don't just authorise a blanket data shift. You could get to choose what data you want to share with the approved third-party provider going forward. Okay. And that data, to start with, is only things like credit card statements and transaction accounts. Right. It will be home loan and other loan data come roughly November of this year, right. And it'll move into other things. So at first, this is why I say it's going to be slow burn.
So you can actually control what you're handing over?
You control it.
And is it, I wonder, is that each time or once you've given approval?
Each time.
Each time? Oh, that's...
Oh, sorry, I apologise. There is some components where you can set it up where it's a constant sharing of that data.
Okay, yeah. Awesome. Because, yeah, that's good to know that clients can actually control that because that's really important for people.
Well, that's right. Yeah. And if you've left it as a sort of an open one where that data can be shared constantly, you can go back in and close that down any time as well.
Oh, that's great to hear. Thanks, Mark.
It might be the bank who's receiving that data that part of their ongoing relationship with you might be contingent to you continuing to share that data.
So if you go in and swap it all the time, they might come back to you. Yeah. They might cancel your loan. No, you better not have that. But I was reading some information. It said, like, for Canada, and it said 1 in 6 Canadians struggle with their finances. And I wouldn't be at all surprised if Australia was similar sort of figures. I don't know. I know in Australia we have a huge amount of people ahead on their mortgages. Like
we do.
Yeah, like 2/3 of people with a mortgage have a year is more.
And a lot of money sitting in offset accounts too.
That's right.
Because Australia, that offset account around the world is known as the kangaroo loan or the Aussie loan.
Oh, is that right?
Yeah, we're one of the pioneers of offset accounts. We actually have quite a competitive banking system for such a small population. But things like, I guess, this data sharing hopefully will make it even more competitive. And what it'll do is it'll allow new entrants to come into the market more and compete from an earlier stage rather than having to, wait until they've got some reasonable scale to be competitive. So that's the purpose and that's the hope of what gets achieved. And certainly as a broker, you've got a very broad panel of lenders to have access to, and there's more and more that are popping up here and there. Obviously, we want to make sure they're secure before we put them on a panel, but then once that they're away, it starts to bring in and create a lot more competition to the major 4 banks. And we've certainly seen a shift over the last few years of how much business goes to the major banks compared to these secondary banks and international banks and even some of the fintechs. Starting to see a nice shift towards that. So it's a good trend. It's a healthy trend. So that's what's useful about it.
Oh, that's good. The one worry I had was that if people are struggling and they might not want the banks to see their, credit cards, because if you're trying to refinance, it can be difficult if the bank thinks, well, are you struggling now? What's going to happen? But then they leave them on a much higher rate and then people suffer more. So, I wonder. But you're saying, well, we can actually control that access.
Yeah. Well, look, if you're on a rate that's you don't think it's a good rate, obviously you contact Louise. She can tell you whether it's a reasonable rate or not, and then work out whether it's worth refinancing or not. That's the other part. But a lot of times, Louise, as you probably do, you go back and renegotiate with the bank as much as you can.
We do.
Rather than having to go through the process of refinance, because there is a cost involved in that sometimes. So
always.
Really
sometimes the cash rebates cover, but it's not always so great. Yeah, there's a lot. You wonder how they can pay them all this cash to move. It seems a bit bizarre, doesn't it?
Yeah, look, if we go down that rabbit hole, but, the bottom line is a lot of banks sometimes are buying the business just to enable them to shift their market share, which of course has a more positive effect on the share price. So it's very interesting, the games that banks will play from time to time. But particularly, this is a key thing. Banks will quite often leave existing clients on the higher rates. They don't adjust those rates as much or as quickly as what they might do with new rates. And that's sort of the bit where, again, it's great they're coming out with competitive rates, but, they're either Louise either renegotiates for you or she'll take you somewhere else to get a better rate.
That's exactly right.
But getting back to this data bit and as well, and this is something that, and we're talking about bank statements and things like that, a lot of these tools, and there's a lot coming out, but there are also better ways for customers to understand their income and expenses, better ways to control their budgets and planning and spending. It is something that we as Australians are not great at doing, and we only tend to look at our finances when we need to do something with them. We need to go and borrow some more money, or we come into a bit of money. What do we do? And that's the only time we seem to sort of sit down and go, well, how do we do this better? There's a few families that I know good, they budget every month and have a look at what they're doing, but a lot of us are not doing enough planning in and around that. And, it's just a classic Aussie, she'll be right, we'll just, something good will come along and away we go. But, the good thing is most Australians are pretty pragmatic about it. The problem is we tend to use our home loans as almost as our nest eggs and our big savings and putting extra money in there. But just another tip and another trick too, Louise, which I'm sure you make people aware of, quite often when interest rates have come down, people are leaving the repayments at that higher rate. Some of the banks now are adjusting it back to the lower repayments. So be careful of getting caught on that. It might be good. If you do need that extra money, that's great. Lower your repayment. But if you don't, it's always healthy to just maintain what you can afford and keep paying off more. You save yourself thousands, years of repayments and thousands of dollars.
That's absolutely right, Mark. But it's also been handy in COVID times. Instead of taking a repayment holiday, people have just been able to reduce their repayment down to what it should be. And that's been awesome,
Exactly.
just to keep you going. So you might not have realised. That's why having someone outside look at your stuff is really important, actually.
Although you've got a data share and technically switch banks, that sounds like, what does the broker play? Well, the broker's crucial from the point of view of, how do you know really what to do? If you're going to a bank, all they're going to sell you is that bank. And we were talking about best interest duty earlier, Louise. This is where the best interest duty comes in. A broker will be obligated to operate in a customer's best interest as if 1 January. So it becomes law. The banks haven't been brought into that law. And a lot of questions, why don't banks have to meet a best interest duty? Well, they actually cannot meet a customer's best interest as it's prescribed in the legislation, because all they can offer and all they will sell is their own products, whereas a broker has a range of lenders and a range of products, and then they'll use that best interest duty process to ensure that they're finding the most appropriate product for whatever you need. And more often than not, it's not the cheapest rate. It's about
the whole
timing.
package.
It's about what you can afford. Right now, if you need to settle on a property within 30 days, there's some banks you can't go to because they don't even pick up the loan file for 30 days.
That's exactly right. Yeah, exactly. We've just done a loan for someone and settled within a week. Application to settlement.
Yep. Wow. That's fantastic.
Yeah, amazing. But anyway, so there's an app now that's part of this open banking called Follow. Can you say any more about that? Explain a bit about that.
Look, I don't know much about that Follow app.
Well, I think it's got the budget side of it that'll help.
That's correct,
so
yeah.
We were
that's
talking,
part of, So it's just something that, and there's a couple of other people out there are offering some of these apps as well, but they're one of the first ones to become approved through the ACCC to receive the data. And really what it does is, it allows people to see more clearly the categorisation of their income and their expenses, and that helps from a budgetary perspective.
Totally. Right. Well, that's what we're all about, helping people get their money right. So
that's right.
Thank you, Mark, so very, very much for your time. I really appreciate it. I know you're frantically busy with everything and all that's happening, but it's fantastic.
That's a pleasure, Louise. Thanks for all the wonderful work you do looking after customers out there. You're a great mortgage broker.
I love looking after my customers, so thank you very much. And this is all part of it. Education is so important, so we're glad to be here for them. Thank you again.
Pleasure. Thank you.